afternoon and welcome to BizTech Asian Midday Market Watch. It's Monday, the 15th of April, and I'm Samantha Voon. Today we welcome Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank Singapore. Vishnu, welcome to the show.
Hi, Sam. Good to be here. Thanks for having me on this Monday morning.
Yeah. Okay, so let's have a look at what's happening with the regional stock markets. Right, we have the Nikkei 225 in Japan down 1.02%, and the Shanghai Composite up 1.28%. In Hong Kong, Hang Seng, it's down 0.73%, and in Australia, ASX is down 0.47%. In South Korea, the Kospi is down 0.46%. Singapore SCI down 1.08%, and in KLCI down 0.42%. Vishnu, what do you make of today's performance?
Well, I think it's a bit of a hangover as well as some caution. Hangover because we saw US equities ending Friday's session in the red. Primarily, it seemed as if there was a lot of caution and particularly step back from weak bank earnings in the US. US consumer sentiments also came out softer, adding to a little bit of concerns about how well global demand is holding up, that, particularly because that also coincided with, on Friday earlier, China's exports printing a very weak number. So I guess that was the kind of ripe grounds for markets to have an excuse to think about demand and take profits. Over the weekend, Iran's strike on Israel also heightened tensions. So the geopolitical risk is very much alive and well. But markets, I think, are turning cautious from a slightly more positive perspective because you see US futures being up. Whether that sustains or not really depends on Israel's response. So far, the hope is there won't be a further escalation. So hopes are really hanging off what you would call a rather low bar, that you don't escalate these tensions further. There's no tit for tat strikes that leads to a wider war. But I think nonetheless, markets are not taking anything for granted. So whilst you see things like gold prices having eased back from the very sharp surge, US dollar, gold remain elevated. USD yields remain lower, which means there's a haven demand to be in US bonds, in the US dollar, in gold. So I think there's some underlying caution that continues, and that resonates perfectly against the backdrop of Asian equities not rallying ahead of a confirmation from the US stocks. For the rest of the week, I suppose markets are also watching things like China's GDP. So the jury is really out, and I think there's no necessity to get prematurely optimistic about anything under this environment. Yeah.
Mm-hmm, mm-hmm. And how are geopolitical tensions impacting investors right now? How should we read risk of sentiment?
That's a pretty good question because it's a tricky one. On one hand, I think we've come to a world in which increasingly there's a desensitization to geopolitical risk. So until and unless we get quite proximate to an actual conflict, then that threatens the wider stability of the region with actual military conflict. That's when you probably see gold prices surging very sharply alongside oil. There's also huge demand for dollar, and typically you don't want to leave the dollar idle, so that also goes into safer US assets such as US treasuries, and so that brings yields lower. So you get the very odd juxtaposition of lower US interest rates and yields, but a higher US dollar. So that typically happens, but this also tends to fade pretty quickly. If some semblance of stability comes back into the market. So one would take these positions in a tactical manner rather than in a sustained manner until and unless you get into a position where you continue to see sustained escalation of geopolitical risks.
Mm-hmm. Yeah, and oil prices were little changed this morning, with Brent crude futures trading 0.14% down at $90.32 per barrel. Why have we not seen a spike? And is this expected to continue, Vishnu?
So if you watch that space, into Iran's strike, At some point, Brent prices were testing $92, might have seen further upside. But I think that's exactly the point here, which is oil prices will react to geopolitical risk. In this case, particularly because these risks, I think, will impose some kind of constraint on either production or the passage of oil. So there would be a very imminent and proximate reaction in oil prices. But the reason why we have not and why oil prices have slipped back, I think there's twofold. One is the very imminent geopolitical analysis, which is if the US has said that they will not support a counterstrike by Israel, and if Iran also concluded that, you know what, that settles the matter, that's essentially what they said after the initial strike, then there are hopes that the conflict will not prolong and it will certainly not escalate. So oil prices have then come back down because in reality, they don't see any major supply side disruption, whether it's in production or in the shipping of oil. For argument's sake, if we did see an escalation of the conflict and if risks of, say, the Straits of Hormuz being blockaded come about due to the direct conflict with Iran, then you could easily see oil prices, going up anywhere between 50 to 100%, or almost doubling. That we could see. So we don't want to downplay oil's sensitivity, even though in this instance it wasn't dramatically changed. The other reason why oil prices will be coming back down is because in a situation, if you see geopolitical risk being heightened, there's less of a case for the OPEC Plus to say we want to continue to keep curbs and keep supply tight, because it's a very precarious situation where they should soften the market with a bit more supply. So in a slightly longer run, I think markets are also anticipating in the absence of barring geopolitical outburst, the OPEC Plus dynamic should turn more favorable for oil prices.
Mm. And okay, so what should we be watching out for this week, and what could move markets, Vishnu?
I'm going to do the broken record thing here, and I'm going to say geopolitics for sure. Watch the space in terms of Israel's response. The biggest risk is, of course, a direct response to Iran, but also a proxy response if there's any step up in agitations between Iran, Syria, or Iran and Lebanon, there's a Hezbollah or whoever. Those could also inflict a little bit more of a geopolitical risk premium in the market. So putting aside geopolitics, the other big things to watch this week would be, in our view, China's GDP data, particularly in the details of it, to see how China's recovery is coming about. As a second order, would be to see whether any policy response from Beijing comes about in response to the data, any gaps in it, or any particular things that Beijing wants to signal. So there would be huge policy signals from China potentially. Geopolitics, although will continue to dominate into the end of the week, and I think anyone watching the picture should also be looking out for central bank talk. And in particular, I think the one thing worth watching, maybe not imminently for the week, but going forward, is how any potential central bank response to higher energy prices might be, whether it would actually defer rate cuts, or it would just, or central banks are willing to look through it. I think those would be, for us, the interesting aspects.
Mm-hmm. Okay, thank you for your insight, Vishnu. We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech Asian Midday Market Watch. I'm Samantha Voon. And this video and podcast will be on our website, www.biztechasia.asia, social media platforms, as well as our syndication partners, TV stations, radio stations, and websites. Remember to like and subscribe. Thanks for tuning in.